Today I will very briefly mention how the US markets, the US dollar, the treasury yields, and our market are looking. And then I will pay particular attention to a few key sectors in Australia and follow up with our high conviction sectors that we think will do quite well in the next few months. So starting with the Dow Jones Index, post-election we've seen a downward breakout from the 4-month established trading range. And if you refer to my last piece, I was expecting the volatility to increase significantly. And we've seen a massive rally over the last 7 days, which came as no surprise. While there are a lot of uncertainties in regard to Trump's policies, one thing that I see on the chart is for sure that he's really good at creating a lot of volatility in the market. And I'm not expecting to see volatility subsiding in the near term. Most probably we will see choppy price action in the next couple of months. Therefore, those breakouts out of the trading range are unreliable and they are not indicative of the future medium to long-term sustainable direction of the market. I would expect the markets to settle the earliest in the first quarter of 2017, where we will be looking for clues where the market is headed long-term. It looks very positive so now, but we will give us a few months to assess the situation. Moving to the US dollar index, we've seen the index trading in a very wide range between 92 and 100 points for a number of years. And I recently updated my target last month, anticipating the US dollar to go to 100 points. This target is now reached, and what we've seen last night is actually a break above the 100 points resistance for the first time. If we see a sustained break above this level in the next couple of weeks, that would confirm the bullish outlook for the US dollar index over the long term. Looking at the charts, I see conflicting information. I have a bearish divergence between the price and the RSI, which points to some weakness in the shorter term. Therefore, most probably we will have clarity about the long-term direction of the US dollar, at least in the next few months. Broadly thinking, I see Donald Trump's relationship with the US dollar being as very complex, and while stronger dollar is going to be beneficial for the United States, an overly strong dollar is not going to be. Therefore, I wouldn't be surprised if we see further strength from here to see some sort of direct intervention in the foreign exchange markets or some monetary or fiscal policies in place just to artificially weaken the US dollar. But in any case, $100 is now cracked for the first time, which is an indication that the US dollar is likely to strengthen in the medium to long term. If we see a sustained break in the next 2 to 3 years, the official price target would be 108 points based on the breakout we've seen last night. Briefly in treasuries, I'm not going to show a chart. I've sent this yesterday. We've seen a very strong breakout of the downtrend line, which is indicative that we are likely to see a further rise in bond yields, while we are expecting to see a pullback just to unwind the strongly overbought momentum conditions in the short term. We are very comfortable with a price target of 3% over the medium term. Moving to our market, we did have a relief rally post-Trump win. However, our market is nowhere as strong as the US, and at best, we are now trading in a range, roughly consolidating between 5,050 points and 5,500. And how I see it in terms of strategy, the only way to outperform the market is to rotate between sectors and grab short-term opportunities whenever they present themselves. So how I see the sectors which are overbought and oversold at the moment. The telecommunication sector is definitely oversold. We've seen Telstra declining to $4.70. My official downside target is $4.50, which I see as a very good buying opportunity. However, the stock is oversold and is definitely in accumulate territory here. TPG and Vocus, I start to see the selling pressure subsiding. TPG is definitely not a buy, but Vocus is showing some signs of forming a base. While I'm not expecting a quick turnaround, I believe we will see stabilization of the prices and eventually some recovery. So sector is oversold, but is not a strong buy yet. Similar to rates and utilities, quite oversold, but there are no signs of bottoming. So I feel it's a little bit early to jump in there. What is oversold? Financials and materials. Tommy Sartor sent a brilliant piece yesterday, so please refer to that. Financials are trading near key resistance and it's very close to overbought levels, so I don't see much upside from here in the near term. So which are the sectors that we are happy to put our money in? Is not a new call. I've been doing regular updates on oil and my view there. We've seen over the past 4 weeks a decline on skepticism amidst the result on the 30th of November when OPEC is going to meet. Everyone was expecting that there might be some cut productions for the first time in 8 years. How I see it, the result, what's going to happen, nobody knows. But if OPEC fails to cut production, I think the price of oil is not going to drop materially from current price levels. Therefore, I'm very confident that we can position around current prices. Upside for oil is $52. This resistance level is going to be broken sometime next year, and that will confirm that oil bottomed and would offer a price target of $65. So how to play the sector? We've seen Woodside, Santos, and Origin rallying there at present near resistance levels. I don't see much upside from here. So the stock of interest is Oil Search, is a high conviction double blast stock. We've seen the price retrace into key support of $6.19, which is likely to hold. I believe in the next 4 to 5 weeks, we can see the price rally into $7.60, where I would be taking some profits. The other commodity of interest, this is a short-term call, is gold. We've seen a massive 3-day decline post-Trump election, and the price of gold retraced down to key support of 1,199, where I'm expecting to see strong buying interest. There is a bullish divergence between the price and the RSI, indicating that we are going to see a bounce in the short term. My price target is not massive, but I think the gold can easily trade to 1,290, which can provide a 10% boost in our gold miners. So we have a high conviction buy on Evolution Mining. Again, is not a new call, but there is a good support for the stock, and I think it can easily trade to $2.50. Northern Star is another one I like. The price target is $4.50. Perseus, it's looking very strong. Price target is 65 cents. And Santa Barbara offering a target of $2.80 in the short term. And I'll finish up with a commodity that I'm actually really bullish over the medium to long term, but I'm expecting a bit of weakness in the short term. That's copper. Most probably you saw an update from me last week highlighting that, in my view, copper has bottomed and the outlook over the medium to long term, it's really very strong. My price target of $2.71, which was a medium-term target, was almost reached in 3 trading sessions. and now I'm updating my numbers. $2.90 to $3, I believe, will be reached sometime next year. Short-term RSI, MACD, stochastics are strongly overbought, so I'm expecting to see a retest of the breakout point around 230. If we see weakness in Sandfire Resources and Oz Minerals, I would be looking to buy those names. Sandfire below 550 presents good buying opportunity. I've made few updates on that stock. We've done really well, but now I'm lifting my price target for a third time on the back of my improved outlook for copper. I think 550 to 590 would be very easily achievable targets in the near term. Oz Minerals, happy to buy around $7.10, and I'm upgrading the price target to $8.60 in the short term and $9 over the long term. So to wrap it up, we have overbought and oversold sectors in Australia, but two key commodities which we are happy to play in the short term: oil search for oil and the gold sector with key picks, Evolution Mining. Thank you.